Well, today is Quadruple Witching Day on Wall Street, and that means contracts on a number of different options are expiring. Doug Prskalo of Blue Capital Group joins us from the Chicago Board Options Exchange. And Doug, people talk about Quadruple Witching when it happens with a lot of anticipation. There seems to be a bit of excitement, trepidation in the air, but sometimes it just doesn't amount to much. So is it just the unpredictability of it all that makes it exciting?
I think you took the words out of my mouth. When you brought it up, I was going to say it's turned into not as big of a deal as people make it out. And I'm not trying to downplay it. But the thing is, with the volatility in the market and the way the market's been moving, not so much over the last couple months, but over the last couple of years, I think people, position traders, are usually out of major positions by the time today rolls around. So early in the week, maybe late last week, they basically kind of come to a decision where they want to be in the market, and they don't play it right into expiration.
All right, now, how much volatility do we normally see when we're in Quadruple Witching, and what happens when things really get out of whack? I mean, how much volatility could we get?
That's what I'm saying. What I'm referring to is it could creep into the market, obviously, on days like today. But as you see with the response today, S&Ps are up a little bit, and there's really not a ton going on down here. I would say years past, it would be a very hectic day. I think right now, people, you don't want to roll the dice on the last day of expiration to determine if you're profitable or not. So coming into expiration, you make a decision, and you kind of try to, thin your positions out. You don't want to roll the dice on expiration Friday and then, determine if you made money or you didn't make money. So I guess what I'm trying to say is volatility does creep in. In the past, it would be a bigger factor. I think these days now, people have gotten smarter, and they just don't want to roll the dice on Friday.
Let's pick up on that word roll and talk about the cost to roll over. If you've got positions in options and futures, you want to extend them. Have you seen the cost of that rollover declining lately?
To a point, but we have a lot of big players in the S&Ps that come in there, and all week long we deal with the people rolling out of position, closing out their June position, rolling into their August or September position. So yeah, it's pricey. I think it's come down. I don't think it's as I guess I'm referring to. I don't think it's as big of a factor as before. But it's one thing we look forward to near expiration week, where people come in and they roll into new months and flatten out their June position.
But Doug, does that decline in price that you're referring to say something to us perhaps about stability returning to the market?
Yeah, I think so. I think we're getting back to normal a bit down here. I wouldn't say anything's over right now, but I think that if you looked at past months, going back into last year, the price to do it was, incredibly high, and things have calmed down a little bit. But as you look at it, look at Vol, look at where Vol was. Vol's above 30 right now, and Vol did trade up to 80, and we're, sitting in the 50, 60 mark. So everything expands when Vol increases, obviously. So the price to do business right now and the price to roll into these positions has lowered right now just due to Vol, but I'm not sure it's over yet.
All right. Doug Prskalo joining us from Blue Capital Group in Chicago. Thank you very much.